Hi, this screencast is to bring you through how to do T accounts, debits and credits in T accounts, balance off the T accounts, and prepare a trial balance. So we're looking at question 6 on page 44 of the manual, where you're asked to prepare the T accounts and the trial balance for a number of transactions. So here are all the transactions. And you have to know how to, I suppose, prepare the T accounts. And a T account looks like this. All of these are T accounts, and we're going to name them and put amounts into them. But before we do that, we need to know, I suppose, what T accounts for each transaction and if they're debited or credited. And just to remember, debit is the left-hand side. And credit is the right-hand side of the T account. So all of here is the debit side, and this side of the account is the credit. Okay. So started the business with 2,000 in the bank. So the owner has invested capital in the business here. And when the owner invests capital, we record, the business needs to record that. And also the business needs to record that it's received 2,000 into its bank. So the two accounts that need to be done here are bank and capital. So you open up a capital account and a bank account. Now, I'm going to put 2,000 in each, but we need to know which one gets debited, which one gets credited. And that's where this is helpful. And there's a rule, well, there's different ways of doing it, but the simplest way, I think, is the rule where you debit the receiver and credit the giver. So the business bank account here is receiving money into it. So we should debit the bank because bank is receiving, and capital is the owner's giving capital. If you get the bank right and the debit, the other has to be credit. So 2,000 debit into bank. So that's what we do. So we have 2,000 gone into credit side of capital, and in the bank account we need to put 2,000 in on the 1st of May. And there it is. And the description should be where the money came from. So the money came from capital, and the description normally is the name of the T account. Next, bought goods on credit from Shaker. So when you buy goods, it's purchases. And the business needs to record purchases of goods, and it needs to record Shaker gave the goods to the business, and that the business owes Shaker money. So Shaker is the giver, and purchases, because the business is receiving goods, so purchases is the receiver here. So purchase and Shaker are the two accounts. So we come down, so two new accounts, we don't have them open yet. So we come to our T accounts, we open an account for purchases and for Shaker. So I've added 900 on the debit side of purchases, and in Shaker then we need to add 900 as well. And so credit Shaker, debit purchases, that's those transactions. Then we go to the next transaction. Okay, the next one, bought goods on credit from Hughes. Once again, two accounts. One is purchases for when you buy goods. And there's no mention of bank or cash here, so Hughes is the other account. So the business owes money to Hughes, so we already have a purchase account open. We don't need to open that again, but we will open a new account for Hughes. So down here, we will open a new account for Hughes. And then we're going to add however much money it was, 250 on the debit side of purchases and 250 on the credit side of Hughes. So there's the 250 gone into the purchase account, and the description is, you could just say Hughes here, we don't even need to say from Hughes. And in Hughes then we want to add 250 on the credit side, and the description is purchases. Next, sold goods for cash. If you sell goods, you open a sales account, and the business is giving goods when it sells goods. So sales is always the credit, because remember the rule, credit the giver. So the giver is sales, and the business is receiving cash. So sales and cash are the two accounts. We don't need to write this at all, really. We could go straight from reading this to the T accounts, but I think this can help at the start initially anyway. So debit cash 180, credit sales 180, and they're two new accounts, so we need to open up two accounts. So I've debited cash 180, and the description I've given is sales to show the money came from sales, and then I open a sales account and put 180 on the credit side for that, and the description is cash, which is the name of the other T account. Return goods to Shaker. So anytime you see goods mentioned, it's either purchases or sales. So here, if the business is returning goods to someone, it's purchase returns, and then Shaker is the other account. So here Shaker is receiving goods from the business or from us, and the other account is purchase returns. So we already have a Shaker account open, so we just need to open a purchase returns account. And we'll credit purchase returns and then debit Shaker. So here's purchase returns account, credit with 40, and then we come up to Shaker, find him here or her, and put the 40 on the credit side. So as we look on Shaker's account now, there's 900 on the credit side. It's a liability account. It's been reduced by 40. If we were to balance off that account at the moment, there'd be 860 on the credit side, which is what happens. What happened, we owe them 900 and we returned 40, so we should only owe them 860. Next, bought goods on credit from Hughes. So purchases and Hughes are the two accounts. Purchases is the receiver because we're receiving the goods. Hughes is giving the goods. And we already have those two accounts open, so we're just going to add 190 into the two accounts. So we come back up, find our purchase account. So now our purchases has 190 added to it. And in our Hughes account, so you always credit one. Here's the credit, one on the right and one on the left. So there should always be a matching debit and credit, left and right. Sold goods on credit to Woody. So sold goods, sales, and you're always giving the goods when you sell. So that's that one. And Woody then is receiving them. So we already have a sales account. We don't have a Woody account. So we'll be opening up a Woody account and adding 390 to it. So a new account down here for Woody. So we've added 390 on the debit side of Woody, and then we'll go up to sales and we should have 390 added to the credit of the sales account. Sold goods for cash. So the business is receiving cash here, so cash is the receiver and sales is the giver. Sales of goods, sold goods, sales account. So we have our sales account, so we just add 210 to the credit side of sales, and then we have a cash account somewhere up here, and there should be 210 coming into the cash account, and the description there is sales to show that the cash came from sales. So you can see there's always matching amounts on the debit and on the credit in different accounts. 300 cash paid into bank. So the two accounts here, the business is giving cash into the bank. So the bank is the receiver, cash the giver. So we have those two accounts open, so we just find them. Okay, with cash open, so we'll do that one. So I've credited cash with 300, which is the same thing as taking money out of cash. And then I need to debit bank. So my bank account is somewhere up here, and there is €300 coming into it on the debit side. And I have from cash there, but I could even just have just cash as the description. Next, bought machinery by check, 550. Now this is important. If you purchase machinery, you're not purchasing goods, you're purchasing an asset. So you want to record that you're receiving machinery. So it's not purchase account. And the giver here is bank, because there's going to be money. When you write a check, it's the same thing as taking money out of the bank. So bank is the giver and machinery is the receiver. So we need to open up an account for machinery. Well, actually we have bank open, so we'll take the money out of the bank and then open up an account for machinery. So credit bank 550, then come down and open up a new account, and it'll have to be debited. So we come down to our machinery account all the way down here, and we show 550 on the debit side of machinery. And this is an asset account, so when we debit an asset account, it increases it. The same way that we credited the bank account, which reduces it. And that's what happened. We're taking money out of bank and we're getting an asset. Next, sold goods on credit to Moore. So when you sell goods, you're giving goods away, it's sales, and Moore is the other account. Did we have a more account? I don't think so. No sales, so we need an account for more. So we've debited more with 220. More is an asset. Debiting an asset increases it. So we find our sales here, and we want to show that we've sold more goods under sales. And then you put the description, once again the name of the other account. How many left of these? Enough of them, isn't there? Woody returned goods to us for 410. So Woody definitely is one account here. Is Woody the giver or receiver? So Woody's returning goods, so he's the giver. So Woody should be credited. And if someone is returning, customers returning goods to us, the business, then it must be sales returns. Remember, anytime it mentions goods, it's either sales or purchases. So it's definitely not sales purchases, it's sales returns. And that's right, because it should be the opposite to sales, the opposite side. So we have a new account for sales returns and Woody. Oh, here's Woody, so let's do it there. Okay, so there's Woody credited 140, and that ends up reducing what he owes because he's returned goods, so that makes sense. And we come down, open up a sales returns account, and we debited with 140, and we just show that it was returned by Woody. That's the description. Next, more return goods to us, so same again, it's going to be sales returns, but instead of Woody, it's going to be Moore. So same account, he's the giver, and sales returns, we're receiving goods, so sales returns is that. So we come back here, we're going to find Moore and sales returns. Okay, here's sales returns. So we debit sales returns with €10. Here's Moore, just up above, and there's the €10. And you can see there's the debit, there's the credit, so always matching, always one side. 3 left. Return goods to Hughes. So Hughes is receiving goods, so Hughes should be the receiver, the debit, and we return goods, so the business returned goods, so this must be goods that we purchased. So purchase returns are the two accounts, are the accounts. And do we have a purchase returns account? We do. So we don't have to open up any new account, we just find Hughes and purchase returns. Okay, so here's purchase returns. So purchase returns is credit with 30, and then we define Hughes and debit Hughes with 30. And that's going to reduce what we owe them. Anything on this side will reduce the overall bigger credit balance. Lastly, paid Shaker by check, 860, and when you see check, you think of bank. If we paid someone, there's money leaving the bank, so bank is the giver, and Shaker is receiving our hard-earned money. And they're the two accounts, so we already have the two of them open, so we just find Shaker and bank. Here's Shaker. Okay, we'll do Shaker. So we've credited Shaker with 860, and we need to debit bank with 860. So this is all the money in the bank, this is the money out. Same with Shaker. We originally purchased goods worth 900, so that was a liability account. But now, after paying him, returning goods and paying him money, we can see that both sides equal 900 and 900. And if we balance that account off, the balance will be nil, which is right because we've paid what we owe to that person. So we shouldn't owe any more, so the balance should be nil in the account. Last, bought machinery on credit. So we're buying machinery, so not purchases. Purchases only for purchase of goods. So machinery. If I could type, and Levy with a Y. So there's no, Levy is a new account, so machinery and Levy. Which one am I going to meet first? It's kind of exciting. Not. That's what's called an accountant joke. So here we debit machinery with 270. We'll have to go down, open up a Levy account and credit it with 270. So here's Levy and 270 the credit side. And thankfully I think we're at the end. So that's all the transaction. Now not the end of this unfortunately, but the end of this step, which is to enter all of these into the T accounts. The next step before we can prepare the trial balance is to balance off the T accounts. So there's a step in between really which balance off the T accounts and then prepare the trial balance. So I'm going to do that next. So we'll go back here and come to the top. And when you're balancing off T accounts, you're just seeing what is left in the account. So bank, I think, is a good one to do here. So we'll do the others after that. So here we put in a total box. If we add up both sides, we can see there's 2,300 in the bank here, gone in, and there's this much money out. So that adds up to 1410. This adds up to 2,300. So if I was to get my calculator and say 2,000 plus 300, so there's 2,300 in that, and I said there was, I think, 1410, but I'll just take them away. Minus 550, minus 860. So there's 890 left in the bank account. The debit side, which is on the left here, is bigger than the credit by 890. So if we were to say what's the balance in that account, what's left in that account at the end of the month, there's 890 euro cash or money in the bank. That's what we call the balance brought down. And the balance brought down goes underneath these total boxes. So here I'm going to write 890 balance brought down. Maybe give myself a bit of space maybe. And at the end of the month, 31st of May, the balance brought down there is 890. So to finish it off, we put the bigger total. So when we added up this side, we got 2,300. When we added up this side, we got, what did we get? We got 1410, but 2,300 is the bigger of the totals. So you never really see this 1410 anywhere. All we do to do with it is say this side minus this side gives you 890, and we put the 890 underneath the bigger total. But the 23 goes here, and then we just say up on top here, the balance carried down is 890 at the end of the month, and that then is balanced. And I don't like the look of that. I'll just change the format. No, that wasn't ideal. So let's do it that way. So, but the most important thing, and that's a balanced account now because both sides add up to 2,300. There's a total box in it, and most importantly, the balance brought down here is 890 on the debit side, which means there's 890 on the left hand side of the bank. And next month, when you start off in the 1st of June, you'll be starting off with a bank account, and you'll say 1st of June, balance brought forward 890 on the debit side, and you won't need to have all the old data. Capital is here. Straight away we can see there's not a lot in this account. If we were to put total boxes in it, which we'll fill out now in a moment, but the key thing is that the credit side is bigger than the debit by 2,000. So if we were to do balance brought down here, it would work out. So our balance brought down will be underneath the total box on the credit side at the end of May. And then to finish it off, put in the big total on both sides, and the brought down balance gets carried above the line here as a carry down balance. But that's what's important here. Same way in the bank, 890. Purchases, put in two totals. Our purchases add up to 1340. And different font. And it's easy to see with this account that the debit side is bigger than the credit side by just that amount. 1340, 1340 even. So the balance brought down at the end of the month is 1340. Now it's best to finish it off, but that's the key thing there. So the reason we finish off is so someone, when they looks at it, can see that, oh yeah, this account is done for the month of May, and it has a balance carried down and a balance brought down, and both sides balanced. That adds up to 1340. This adds up to 1340. So it's balanced. Shaker here, we look at both sides. I'm not leaving any space because I can see This side adds up to 900. And when we add up this side, it's 900. So there's no difference between the sides. And if that happens, the balance brought down is nil. Or you can just write nil, or even mil, which wouldn't be ideal in case it was a million, but nil is fine for that. Hues. Okay, so there is a bit of activity with hues here. We put in our totals, look at both sides. That side adds up to 440. This side to 30. So straight away in hues, the credit side is bigger than the debit by 410, so the balance brought down at the end of the month is 410 on the credit side. That's important. And then really what happens is you bring the balance brought down, it gets carried up here. And that just means both sides balance then. But that's the most important thing. And this figure, 410, is what goes in the trial balance. Cash, we'll do something similar. Add up both sides. So the debit side is 390, credit side 300. Debit side is bigger by 90, so the balance brought down is 90. And then that just gets carried up, and it'll just mean it'll be balanced off then. But that 90 on the debit side is what goes into the trial balance on the debit side. Sales, easy to do. There are only amounts on the debit side, so the debit side is bigger. We can put it in a total box for the fun of it. But the main thing is the balance brought down is 1,000. And if you left it at that, it wouldn't be the end of the world, you know. But really, it's quicker just to, well, not quicker. It's definitely not quicker, but it's better. You'd lose some marks in an exam if you didn't do this bit, the carry down. But you get most of the marks if all you did was put in the total and the bought down balance, in fairness. Okay, here's purchase returns. So 70. Credit side is bigger by 70. So the balance bought down at the end of the month is 70. And then if we were to finish it off, which I suppose we should do, show a good example. The balance carried down is 70 also. Okay, Woody, bit of variety here, which is no harm. So we add up both sides. Left hand side is 390. It's bigger than the right hand side. It's bigger by 150. So underneath on the bigger side, our balance bought down. It's bought down under the total, if that helps you remember. And that's what goes into our trial balance for Woody, 150 on the debit side. And we put in 150 here as our carry down balance. Machinery, please say we're near the end. 800, oh, what am I on? 23 minutes, because I want to just not have it too long. So the balance brought down is 820, 31st of the 5th. More here. So Moore has 220 on the debit, 10 on the credit, so the debit side is bigger by 210. And 210 therefore is the balance brought down. It goes underneath the total, that's important. And then always when there's different amounts you should do carry down. When there's amounts on both sides, I'd expect you to show the balance carry down also. I know it balances, but this guy in the bold, that's what's important. Sales returns 140, 150 even, and our balance brought down then is 150 at the end of the month. Levy then, yay, we're at the end, 270. Okay, next thing to do after you've done that is the trial balance. Remember, in this, we prepare the T accounts, balance off the T accounts, and then prepare the trial balance. So that's the next thing. And what are we on? 25 minutes. So this won't take long. A couple of minutes. So I need to make a bit of space. Get rid of the borders there. Where's no border here? Okay, and trial balance at 31st of May. We put in the title of the trial balance. You would put in the name of the trader. I didn't give you a name here, but say this was J. Kelly, trial balance of J. Kelly at 31st of May, and then we have debit and credit. So it's not a T account, it's just a list of the T accounts. So we're going to list the accounts down, and we're going to put in the balance bought down there. So the first two T accounts, capital, bank, purchases, shaker, Hughes, and cash. So we come down here, just list them down, change the format of them so they're, and we put in the balance bought down. So just as you, for each T account, the amount goes in. So I come up to capital, 2,000 on the credit is the balance bought down. Bank 890 debit, so we ignore the total, but I should do one at a time, I suppose. Capital is 2,000 on the credit side. Okay, let's hide some of these as we go. Bank is 890 on the debit side. So we just say, okay, 890 here into bank. So you just, then you go down to the next T account, which is purchases, and put the balance bought down whatever side it appears. Let's do this so it's a bit more in the middle perhaps, so it's a bit more clear what's what. Purchase is the next account, and the bought down balance on purchases 1340 just goes in. Next account is shaker, and we remember shaker was the same both sides, so there was no balance in shaker, so we can just put nil there. You could leave them out. Hughes, the balance was 410 on the credit side, so you don't put in what's the total, you put in the balance bought down, and on the same side, so on the credit side under Hughes we have 410. Next account is cash. So cash, total of that, but what we're interested in is the balance bought down of 90 on the debit side. So cash 90. The next account after cash is sales, which is 1,000 on the credit side. So we just go. So we just enter the other accounts in, each T account, and then we're going to put the balance bought down. So purchase returns was up here, and purchase returns was 70 on the credit side, and Woody was 150 on the debit. So 70 and 150. Machinery, 820 balance bought down on the debit side. Moore is next. Moore 210 on the debit side. Sales returns 150 on the debit side. Levy 270 on the credit side. And when you've done that, you're very nearly finished. We just put in a total and we add up both sides. So that should be 3750. What did I leave out? Yes, and the pearls of not using a calculator when you should. Woody 390 on the debit side, less 140. That's when I balanced this off. I should have said the difference between 390 and 140 is 250, not 150. And then, so 250 is the balance brought down for Woody. So that's how you find out if you make a mistake. So I'd like to say that was deliberate. Maybe I should. And now our trial balance is balanced. We have, why didn't they go to the middle before? The debit side adds up to 3750, the credit side adds up to 3750, and when you do that, you know it's balanced. And if we look quickly down along on the credit side of a trial balance, so the question is finished now. The type of accounts you expect to see are liabilities and revenue, whereas on the debit side, you expect to see asset and expenses. And quickly on the credit side, capital is a type of liability because the business owes that back to the owner. Hues, a liability, someone we bought goods off we didn't pay yet. Sales is a revenue account. Purchase returns, kind of like a revenue account. It's reducing one of our expense accounts. And levy is an accounts payable or a creditor, someone we owe money to. And on the debit side here, bank, money in the bank is an asset. Purchases is an expense account. Cash is an asset, so I'd expect that there. Woody is a debtor or an accounts receivable, someone that has bought goods off us or we sold goods to on credit and they owe us money, so an asset. Machinery is an asset. Moore, another accounts receivable, another asset. Sales returns is a type of an expense. It reduces our income. And that's it. So that's the trial balance, and then we use this to prepare the income statement and the statement of financial position. But that's another days or week's work, so don't worry about that. That's the trial balance finished. So thanks for watching. I hope that was useful.